Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Very good morning to all. Today will be the Thursday, 30th of November. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right. So before we start, this is the key takeaway in our usual daily dose of market insights. So let us kick off with what happened yesterday, okay, during the European session and the US session, and as well as in today's early Asia session before 11 a.m. So yesterday, the dollar continues to weaken, and as well as gold prices continue to remain in its robust uptrend since the start about 4 weeks ago with a couple of short-term uptrend. And the reason being over here is because what we could see over here is that the US 10-year Treasury yield, okay, express over here, the US 10-year Treasury yield continue to actually inch downward, okay, breaking below the medium-term ascending channel that was formerly in place since 4th of May low this year, below the 20 and below the 50-day moving average, indicating to us that this short to medium-term downtrend that is in place since 24th of October high at the 5% psychological level remains intact. Yesterday, it broke down below a near-term support level, at 4.33%. And right now, it's actually inching down towards a major support zone of 4.06% / 3.97%. So there's still some more room for potential downside, which will correspond to the key 200-day moving average. So given that there's still room for further potential downside, that actually add on downside pressure on the US dollar. So that actually keeping also that particular resilient bullish trend that was seen about 4 weeks ago in the benchmark US stock indices still remains intact, despite the fact that yesterday we see a rather mixed performance in the US benchmark index. The SPX is actually down negative 0.10%, a bit more of a profit taking, I would say. The NASDAQ 100, initially it rallied up and hit our resistance level at that 16,000 mark level, 16,010 or 16,160 level, okay. Later I'll highlight the short-term technical outlook chart. Then after that, it ended the session down negative 0.14%. The Russell 2000 was actually the top performer, positive 0.61%, and the Dow Jones Industrial Average almost unchanged, positive 0.04%. So given this long-term 10-year Treasury yield take a look at it, is like a proxy of a long-term cost of funding. So if this US 10-year Treasury going to inch downwards, potentially we will start to see, we call it further expectation of longer term cost of funding will also start to inch downward as well. So that actually be positive for profit margins in terms of corporate finance 101. So that should explain why the US benchmark stock indices continue to be resilient in its ongoing short-term uptrend that is in place since 4 weeks ago. Okay, so if you look at the heat map of the S&P yesterday, over here, the heat map of the S&P, overall, the one that causes the profit taking is the 7 mega cap stocks. So that actually pretty much nature, given that the 7 mega cap stocks has been the outperformer in the last 2 weeks or so. So a bit of profit taking, what we see yesterday, especially Microsoft down negative 1% after hitting its fresh all-time high 2 days ago. The semiconductor continue to remain robust. NVIDIA, one of the most valuable semiconductor stock in globally and as well as US, up positive 0.67%. And the rest of the component in the S&P 500 still looks rather, in terms of the breadth, is still rather positive. That means seems to me there's more green than more red over here. Okay, then also a couple of things about Fed speak yesterday. Pardon me. Yesterday we have I think we have three Federal Reserve officials speaking. So two of them actually in favor to actually keep rates on hold. That means no urgency to rise interest rates. But however, there's one outlier, which is this guy called Federal Reserve in the state of Richmond, but Barkin. He actually opted that Fed should actually keep an option to hike. Okay, so there's two kind of a stampede, one hawkish. So overall, it gives us a rather, given yesterday, the day before, we also start to see a slew of Fed speak as well. So overall, it's rather a balanced picture. Some of them still opt for to wait and see for more data to decide, and the other actually keep an opinion. I think two of them has opinion to actually be more mindful of we call it inflationary expectation may creep back, and they actually is in favor to leave the door open for another hike. But net the market pricing based on the 10-year US Treasury yield is more earing towards a dovish Fed at this point in time, and having that we call it positive feedback loop into US risk assets, all right, as well as a negative feedback loop on the US dollar. Okay, so with that, and also before we go, our short-term technical outlook chart, one major data out from China will be the PMI data over here. Okay, wait, where is it? Yeah, so the state NPS, the statisticals, the NBS Manufacturing PMI and the non-manufacturing PMI for the month of November, China. So there's still risk of what I call deflationary spiral that is still creeping around the corner in China. Why? Because the manufacturing sector continues to contract below 50. If you look at the trend of the of the manufacturing PMI in China, it's very clearly showing us a kind of a growth deceleration after have a bump up on 50 in the month of September. Then thereafter, for two consecutive months, October and November, it starts to inch downwards again. All right. And also, if you look at the services sector in China, which is the non-manufacturing PMI, even though they stay above the expansionary level of 50 for 11 straight months, but this time around at 50.2 for November, it's the slowest pace of expansion in the last 11 months for the services sector, okay, despite staying the Fed above 50. So all in all, what we could see over here is that we still see a bit of what I call deflationary risk creeping back into China. So that actually explains why the Hang Seng index today actually continue to collapse since the start of this, since late last week, together with fears of this inflation, because flu outbreak among small kids in China. So later I'll touch on more on the Hang Seng index, the key levels to watch. All right. So now straight into the short-term technical outlook. Okay, so let us start with the major indices first. All right. Okay, so let me open up my screen, share with you all. Okay, Nasdaq 100. Okay, so let us look at the screen instead. So Nasdaq 100 over here yesterday, it actually during the intraday US session, it actually hit 16,160 that we highlighted. It broke above it. Then thereafter, it starts to inch back down again. So it seems to me that overall, it's still trading within a minor range configuration that has in place since last Wednesday, 22nd of November, but still within this short-term uptrend that is still intact since the low of 27th of October. Why? Because if you look at the current we call it reading on the hourly RSI, it continued to shape higher high. All right, higher high yesterday. No signs of a bullish exhaustion because there's no bearish divergence in line with price action, higher high. And the RSI also seems to be supported over here as well, slightly below the 50 level. Okay, so all in all, I'll be still using that 15,765 slash 15,690 as a key short-term pivotal support level, where the upward sloping 20-day moving average should be soon coming to confluence this level as well to maintain that short-term bullish outlook. Next intermediate resistance to watch will be at 16,310 level, okay, 16,310. But however, if you have an hourly close below 15,690, a breakdown below it, potentially this we call it a bullish impulsive up move within this short-term minor uptrend from the low of 27 October will be kind of negated to kickstart the minor corrective pullback towards 15,380 slash 15,175, which is also confluence with the upward sloping 50-day moving average. All right, so that will be the Nasdaq 100. So over here for the Dow Jones Industrial Average, the US Wall Street 30, this index here continue to be much more exhibit much more stronger bullish momentum as compared to the Nasdaq 100. Why? Because price action didn't actually trade within a minor range. In fact, it's now trading within a minor uptrend, minor impulsive up move within a short-term uptrend that is still intact since 10th of November low. Higher high, higher low. RSI continue to actually hover above the 50 level, indicating to us that short-term bullish momentums potentially remains intact on the US Wall Street 30 index. Okay, so I don't want to title it so tightly at 35,295. So 35,295 will be like a near-term support level. Still using 35,175 as my key short-term pivotal support level. Maintain that short-term bullish outlook, heading up towards the next resistance level at 35,830, which is actually the 9 and 10 of February swing high area in 2022. All right. However, if we start to see a breakdown and hourly close below 35,175, then this short-term, I would say this minor impulsive up move sequence will be invalidated to kickstart a minor corrective pullback towards this upward sloping 20-day moving average, now acting as a confluencing at a support zone of 34,830, 34,750. Okay, German 30. So German 30 yesterday hit our intermediate resistance level at 16,200. That we actually remains in a short-term bullish outlook bias since the start of this week. So still no change, continue to maintain that short-term bullish outlook, but nevertheless, the RSI has really hit a kind of an extreme overbought level already. Over here, what we could see if previously it actually hit this peak at this point in time. Yeah. So what we could see now, the RSI now is attempting to inch down to exit from this overbought level. So potentially, right, what we could see at this 16,200, that could be a kind of a put in a way that intraday pullback, yeah, potential intraday pullback towards which level potentially will be at this former swing high minus swing high turns into a pullback support at 16,050 level. Okay, so given the fact that this level has not been tested yet, 16,050, so I do not want to use 16,050 as my Titan key short-term pivotal support for today. So still maintaining that bullish outlook for that to first step see that intraday minor potential pullback, still using 15,930 as my key short-term pivotal support level to maintain this short-term bullish outlook, with the next resistance potentially coming in at 16,400 level. However, a breakdown below 15,930, that means hourly close below this level, 15,930, kind of kickstart a minor corrective pullback towards this 20-day moving average and upward sloping 200-day moving average and the upward sloping 20-day moving average, confluencing at this support zone at 15,660/15,560. All right. Then moving on, next will be the Japan 225. So Japan 225 continue to trade within a minor, we call it a range configuration that is in place since 20th of November this year at 33,825. Tested 3 times, with can't break since this week Monday. So however, it managed to actually always find support level. This is the second time price actually tested and bounced off this 33,100 level. Why is it important? Because it's confluenced by 3 similar elements. The pullback support of this former medium-term descending trend line from 19th of June that has been taken out earlier on the 17th of November, down turns into a pullback support. Graphically, it's the minor swing low area of 22nd of November, which actually depict this minor range configuration, and as well as this upward sloping 20-day moving average confluencing at the same level at 33,100. So as long as the 33,100 holds, potentially we could see another round of retest at the minor range resistance at 33,825. So still maintaining that short-term bullish outlook on the Japan 225 index, and given the fact that the hourly RSI continue to slope upwards, exhibiting higher low, given a bit of chance of a what you call it revival of short-term bullish momentum. All right, so that is for the Japan 225 index. Okay, right now the weakest so far is the Hong Kong 33. Like I explained earlier, why? Because of the that earlier very weak China PMI data. So it actually going to inch downwards and now testing this major support level of 16,800 slash 16,500. So I will use a Titan key short-term pivotal resistance for today, 17,160, to maintain that short-term bearish outlook on the Hong Kong 33 index towards the major support zone of 16,800 slash 16,500. However, if we start to see an hourly close above 17,160, then this short-term bearish outlook will be invalidated to see a kind of a counter trend rebound heading up towards the 20-day moving average, acting as a resistance level, and as well as this former minor ascending trendline support now turns into a pullback resistance, confluencing all at this zone at 17,380 slash 17,540. All right, so now that's for the Hong Kong 33. That's pretty much sum up for our outlook for the major stock indices. Now let's switch on to the FX market. So over here, the FX market over here, let us kickstart the European currency first. So as I highlighted earlier, the dollar continues to remain weak. So you look at the dollar index, it continues to actually inch down lower. 3 consecutive day close below the 200-day moving average, and also breaking down below this near-term support level at 103.30. So the next support level to watch will be at 195. Then followed by the swing low area, the medium-term swing low of 14th of June at 99.40. So net overall, this short to medium term downtrend on the US dollar index that is still that kickstarted on the 3rd of October still remains pretty much intact. If you look at the euro dollar, so euro dollar continue to actually yesterday it did a pullback, but the pullback managed to store at our near-term support level that we highlighted yesterday, which is at 1.096. So I don't want to use this 1.906 as my key pivotal support. So 1.090 will be still the short-term pivotal support. Why? Because it confluences with 2 significant minor elements. Congestion area of 22nd of November all the way up to the 24th of November that was taken out, managed to help onto the 7th of November, and as well as the minor ascending channel support that I drew from the low of 2nd of November. As long as 1.09 short-term pivotal support holds, this short-term bullish outlook remains intact for the euro dollar, potentially sees the next resistance coming in at 110.40. Only a breakdown below 109, that means the hourly close below 109. Then this bullish tone will be negated to potentially kickstart a minor corrective decline or pullback heading towards the swing low area of 22nd of November. I think now turns which is the next intermediate support at 1.085. There also confluence with this upward sloping 20-day moving average coming close to it as well. Okay, so that is for the euro dollar. Okay, sterling dollar. So sterling dollar over here continue to actually trade sideways, holding above the intermediate near-term support level at 1.2640. We highlighted yesterday. So still no change. I'll be using 126 figure level as the key short-term pivotal support level to maintain this short-term bullish outlook, with the next resistance potential coming in at the psychological 1.28 figure level. However, hourly close below 1.26 short-term pivotal support will negate this bullish tone to see a minor corrective decline or pullback towards 1.2520 and potentially 1.2440, which confluence with the 20-day moving average and the upward sloping confluence with the 200-day moving average and the upward sloping 20-day MA. Okay, now Asia Pacific zone currency. Let's kickstart with the dollar yen first. So dollar yen yesterday we remains bearish, if you could recall, for those who joined our daily dose of market insight. So in fact, since a week and a half ago, we actually mentioned we do have a short to medium term bearish bias on the dollar yen. Why? Because I highlighted on the data, I'll flash up the daily chart again. But all in all, for a short term outlook for today, for sure 148.15 is the key short-term pivotal resistance that we highlighted yesterday. Initially yesterday, we look out for a minor bounce first. Why? Because the hourly RSI is at the oversold level. So the bounce already take shape. Then thereafter, the dollar yen going to trade lower throughout the US session yesterday. So for sure, this is a key short-term pivotal resistance to watch to maintain that short-term bearish outlook on the dollar yen. As long as 148.15 is not surpassed today, potentially dollar yen could test the next support level at 146.20 / 145.90 level. However, only a hourly close above 148.15, then potentially we could see the start of a minor corrective, we call it a counter trend rebound in first step towards 148.90 and 149.70, which is the range, minor range top of 23 of November to 24th of November, and also the 20-day moving average and 50-day moving average acting as a resistance level as well. Okay, so now longer term outlook of the dollar yen remains bearish. So this is longer term on the daily chart. So what we could see over here is that for sure the 20-day is about to shape a bearish crossover of the 50-day. And also the RSI, the daily RSI continued to inch much lower after that momentum bearish breakdown on 17th of November, and bear in mind the RSI continued to shape lower low and it hasn't hit the oversold region yet. So the next support level to watch out for will be 144.80. So the next support level, then for sure the 141.85 will be a key support level to watch. Why? Because this is the 200-day moving average of the dollar yen that hasn't broken down yet since 18th of May this year. Okay, so these are the two support level to watch on the daily chart. So the reason why I flashed this chart over here on the daily chart, why? Because yes, even though the last few weeks we see dollar yen coming down, but on the daily time frame over here, it indicates to us that the bearish momentum still remains intact, indicate to us that yes, even though the last few days we see a bit of push down, but however, this medium-term uptrend that is in place since 24th of March this year is getting exhausted. So if we will have a mentality to look for bullish bias on dips, this particular strategy may not work for now because the daily chart of the dollar yen continue to exhibit medium-term bearish momentum. Okay, so that's the reason why I want to flash the daily chart for you all to see. Now, Aussie dollar continue to actually inch up with our Titan key short-term pivotal support level at 65.95, despite yesterday the lower than expected monthly Australia CPI data up for the month of October, going to inch upward. And the reason why it inched upward right at the 200-day moving average, and also retested this minor ascending channel support from the low of 17th of November. So all in all, still no change, still maintaining that short-term bullish outlook on the Australia dollar, the Aussie dollar, as long as 65.95 key short-term pivotal support holds. The next resistance to watch out for will be at 67.10. Okay, on the Australia dollar. Only an hourly close and a breakdown below 65.95, then this short-term bullish outlook will be invalidated to see the start of a minor corrective pullback towards 65.20/65 figure level that confluence with this former minor range resistance from 6th of November to 16th of November, taken out, now turns into a pullback support level, and as well as the upward sloping 20-day moving average that's converging very closely at the 65 figure level as well. All right, so that's sum up for the FX market. Now let's move to the commodity markets for gold. So for gold over here, the gold price going to inch upwards much higher. No clear signs of a bullish exhaustion yet over here. So still using that 2018 level Titan key short-term pivotal support to maintain that short-term bullish outlook, heading into the major range, a major resistance of 2067/2075. 2075 is the current all-time high level on spot gold XAU/USD. Only an hourly close below 2018, then we may kickstart a kind of a minor corrective pullback, or a minor corrective pullback towards 2006, followed by 1997, which is the this 20-day moving average acting as a support level, and the minor swing low area of 21st of November to 23rd of November. All right, now for oil price. Okay, so we know that oil price actually whipsaw since 2 weeks ago. Why? Because of that uncertainty among OPEC plus member in terms of how much supply they do want to cut in 2024. So, but if you look at it over here, is that in the last few sessions since the start of this week, the price action going to shape a higher low. All right, so all in all, right, what we could see in short term over here, this is the hourly chart of the West Texas oil. It started to actually shape this potential, okay, let me highlight for you all, a potential inverse bullish inverse head and shoulder configuration. All right, okay, so this is the right shoulder, left shoulder. Okay, this will be the inverted head, and this will be the right shoulder. All right, so I'll be using the swing low of the right shoulder at 74.30. The neckline resistance for here, 78.10, will be that bullish upside trigger level, confluencing with three elements: the 200-day moving average, the neckline resistance, and the 20-day moving average, all coming at 78.10. So if we start to see an hourly close above 78.10, potentially we may start to kickstart a what I call a minor bullish breakout, with the next intermediate resistance to watch will be at 81.05. Okay, so at least 81.05 also confluence with this descending channel resistance that is in place since 28th of September swing high. All right, but however, if we start to see an hourly close below 74.30, then we'll see another round of choppy movement to retest the medium-term support level at 72.70/72.40. Okay, so that's sum up for the short-term technical outlook. So before we go, let us take a look at the key highlight to watch out, key events to watch out for today as we head out towards the European session and the US session over here. So later on during the European session at 6 p.m. Singapore time, you have the flash Eurozone inflation rate for the month of November. So market is now expecting a slight tick down again, 2.7% from October, 2.9% year on year. So another month of inflation pressure deceleration in Eurozone. And most important, later on during the US session, we have the all important Fed preferred gauge of inflation will be the core PCE price index. So for the core PCE price over here, core PCE price year-on-year change released at 9:30 p.m. Singapore time, market is expecting another dip to 3.5% from 3.7% in November. So if that actually came in line with expectation, we will see the core PCE price index annualized change hitting close to a 1.5-year low. Okay, so you look at the 5-year trend, it's going to inch downward, but for sure, if price action going to actually surprise on the upside, especially hitting up back to 4% level, that could actually, number one, derail the ongoing, we call it ongoing dollar weakness story, or ongoing dollar narrative, and also the short-term bullish outlook on gold price as well will be potentially derailed as well, and also that short-term bullish momentum on the benchmark US stock indices potentially could derail as well if the core PCE price index surprises on the upside and hitting 4% level for the month of October. Yeah, so do keep a lookout. So that will actually be released at 9:30 p.m. Singapore time. And also not forgetting over here is that we also do have the OPEC Plus meeting. So this meeting was delayed. Initially it was scheduled on last Sunday, so it's been pushed to 30th of November. So time-wise, there's no clear time-wise yet when will it be released. So very likely is perhaps during the start of the US session. That is the usual time where OPEC Plus release their decision on their supply levels, the supply output levels for next month, and perhaps giving a bit of guidance heading into the first half of 2024 as well. So with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.